NVIDIA stock absolutely got destroyed today, and we got to talk about it. Let's get started. What's up, everybody? My name is Ala and welcome to my world of stocks. So today we're going to talk about NVIDIA stock, just a quick little news update today. And the reason why is because the stock got absolutely crushed today. And you guys might remember that I've actually been looking to pick up NVIDIA stock in 2019, and I've just been waiting for the right prices. So I'll also let you know today if I've decided to actually buy NVIDIA stock on this crash that they essentially experienced today. But when talking about that crash, let's look at how much they actually dropped. Well, at one point today, they dropped by over 18%, so pretty close to a 20% drop in just a single day. That's really bad. And even more so, they're actually down over 40% in the past year and well over 50% from their 52-week high. So this is a stock that is actually trading much lower than what they were recently trading for. And when looking at their valuation, according to Yahoo Finance, I really don't think that they're too expensive right now considering all of their future potential. Now, they currently have a trailing PE of 18 and a slightly worse forward PE of 19 with a pretty good PEG ratio of around 1.3. Although their PS and PB ratios are a bit high, so while this isn't by any means a value stock, I do still think that it's a pretty cheap growth stock compared to some other growth companies out there that are trading at much higher valuations. Even if we look at one of their closest competitors like AMD, which I happen to already own, but they took a massive hit today too, down over 8%, and they still have a trailing PE of 65 and a forward PE of 32. So if you're really looking for some value in this industry, Intel is probably your best choice with a forward PE of 10, but again, in the long run, I still prefer AMD or NVIDIA over the next 10 years, although I have to admit that Intel is becoming more and more interesting to me at these lower prices. In any case, NVIDIA also attracts me heavily as a dividend growth stock with only around a 0.4% yield and 6 years of growth, but a 5-year growth rate well into the double digits at 14.5% and one of the lowest payout ratios out there that is still in the single digits. So there's plenty of room to grow that dividend in the future if they choose to do so. But when looking at why NVIDIA stock crashed today, there's really a couple reasons that we can look at, and these are reasons that we've actually been talking about already on the channel, but we continue to see NVIDIA struggle in these areas, and it's probably going to be a couple quarters until we really see them rebound and return to their past growth. But when looking at the first reason, that really has to do with cryptocurrency prices crashing, which led to crypto mining not being as profitable as before, which led to crypto miners reselling their AMD and NVIDIA GPUs, which led to an oversupply of secondhand GPUs out in the market for very low prices that made it very difficult for AMD and NVIDIA to sell through their newer inventory. So NVIDIA now released an update to their financial guidance for the fourth quarter of 2018, but for them it's fiscal 2019, so just kind of keep that in mind. Technically for them, they consider it fourth quarter fiscal 2019, in which they lowered revenue expectations very significantly by $500 million, which represents a drop in guidance of about 18%, which also represents about the same drop in their share price. But they are now expecting just $2.2 billion in revenue versus the previous estimate of around 2.7, which, by the way, even that estimate was already lower than analysts' expectations, who were looking to see revenue at $3.4 billion, which would have been a 17% increase year over year from the $2.91 billion that they reported a year prior. But instead, NVIDIA guided much lower at $2.7 billion, which is an actual decrease year over year of about 7%. And of course, they have now revised that even lower to $2.2 billion, which will end up being a year over year decrease that is even higher at around 24%. And that is without a doubt a very large decline in their revenue. On top of that, they also lowered guidance for their gross margin, which is now expected to shrink from over 62% to about 55%. And so when looking at the segments that are being affected the most, those include their gaming and data center products. And again, when talking about gaming, NVIDIA references the cryptocurrency boom that we already talked about, bringing excess mid-range channel inventory. Now the key word here is mid-range, because if you really think about it, mid-range is their 10100 series cards like the 1060 and 1070 that are still performing pretty well and go for much lower prices than NVIDIA's new 2000 series cards, and even in the higher range like the 1080 and 1080 Ti, those are also cheaper than the 2080 and 2080 Ti, and customers feel that there just isn't as much of a performance boost to really warrant those higher price tags, given that one of the main selling points of NVIDIA's new GPUs is their ray tracing capabilities. But the problem there is that game developers haven't really adopted this technology yet, and the few games that do use ray tracing tend to take a big hit in performance when looking at frames per second and how smooth the games run. I do, however, think that ray tracing is the future of gaming, but I just think that the technology isn't quite there yet. And it is true that I actually purchased a 2070 card myself, but the reason I did that was because I was building a new PC from scratch, and the company that I bought my GPU from, they actually had a Cyber Monday special where they upgraded a 1070 for free to a 2070. So I was actually trying to get a 1070 card rather than a 2070 card. And I just think that anybody who already has a 10 series card is very unlikely to spend hundreds of dollars, if not even like over $1,000, to upgrade their GPU for a new GPU that doesn't necessarily offer a huge increase in performance. It is definitely better. They are definitely better cards, but they're not, they're not huge enough performance to warrant that higher price tag. And that's essentially what management said here, bringing attention to the fact that the new Turing-based cards do have some cool technology, but sales were lower than expected as customers wait for lower price points, and I'm quoting here, further demonstrations of RTX technology in actual games. However, another reason that they note is, quote, deteriorating macroeconomic conditions, particularly in China, have impacted consumer demand for NVIDIA gaming GPUs. And that makes total sense to me, as we've already seen many companies blame China's weakening economy for slower growth or even declines. One obvious example is Apple, who blamed China for weakening iPhone sales. And if we look at China's GDP growth, we can see that it slowed down to about 6.4% in their last quarter, and many analysts feel that it's actually much worse than that. In any case, we also know that NVIDIA is seeing some trouble in their data center business, which up until now seemed to be an unstoppable growth machine, which grew year over year by 71% in Q1, 83% in Q2, but then that growth slowed down to 58% in Q3, and now we have management saying that data center revenue for Q4 came in short of expectations, which is likely going to translate to even slower growth. And when looking at the reasons why, that could also have to do with some macroeconomic uncertainties, leading to what they refer to as a number of data center deals not closing in the last month of the quarter, as customers are being more cautious with their spending. Still, when looking at the bright side of things, management also stated that they still have a large and expanding addressable market opportunity in artificial intelligence and high-performance computing, which they believe their competitive position remains intact. And they are also making progress in reducing the amounts of excess inventory and its impact on their business, which they claim is in line with management's expectations. So now you might be asking, well, what are those expectations? Where exactly are they at? Well, if we look back at their last earnings call, we know that their CFO stated that the Pascal-based cards, those being the cheaper 10 series cards, were likely to sell well during the holidays through the fourth quarter, and it may take 1 or 2 quarters to work through it. So if NVIDIA is making progress here that is in line with their own expectations, then I think we're likely to see at least one more rough quarter, that being Q1 of their fiscal 2020, and then we could possibly see a return to seeing some growth. However, I'm still a little bit less optimistic than that. I think this could continue a little bit further, because we're now starting to see some issues creep up with China's economy, some macroeconomic issues that NVIDIA isn't really in control of. So while I do think that we're going to get over the whole, cryptocurrency like hangover or whatever you want to call it, in the next, 1 or 2 quarters, I think we'll definitely get past that, and then we'll return to growth there. The issue still remains of, macroeconomic issues, and especially China. However, I do think, I'm a little optimistic there as well, because I think if a trade deal gets done between the US and China, I think that could add some certainty into the market, and it may end up helping NVIDIA out as well. But it's still just a little bit of an unknown as far as going forward. But until then, I do plan on taking advantage of all of this short-term volatility, all of this short-term noise really hurting NVIDIA, really bringing down its stock price. And in fact, today I did actually open up a small position in NVIDIA. Relative to me, I bought a small amount of shares. I don't disclose how many shares because that's really private information, and I usually don't disclose the actual price tag, but I did buy it at around $132, so that's kind of my price range right now. And the reason I only bought a small amount of shares is because I think that this short-term noise is going to continue for at least a little while, and I could see the stock being dragged down even lower, at which point I would like to take advantage of those lower prices. So you guys know me, I'm never about lump sum investing. I don't just jump in, a stock crashes, I don't go, oh, I'm just gonna buy I'm gonna put 100% of whatever position I wanna have in it. I'm just gonna put it all in now because it crashed. That's not how I do things. I open up a very small position and then, in hopes that it will continue to struggle in the future. And if it doesn't, it doesn't. If it takes off, then it takes off. And maybe I missed the boat kind of there, but I'm totally fine with that. I'd rather kind of miss the boat as opposed to jumping all in a lump sum investment and then the stock crashing even more and then just being kind of screwed and just, I basically just have to wait at that point. And I don't really have any excess amount of money to take advantage of those lower prices. So I have a much more of a cautious approach, but for me, it really works out well and I can sleep well at night. And in the future, I still think that NVIDIA has all the potential in the world. We're talking about artificial intelligence, Internet of Things, machine learning, deep learning, data center, gaming, what's the other one? Autonomous driving, right? There's so many growth drivers for NVIDIA. Now, I already made a video where I talked about all those different markets and everything that NVIDIA is doing in all those markets. So it was a very detailed video. So I'll have it linked for you up here down in the description. And at the end of this video, I'll have it on a clickable card if you really want to learn more about NVIDIA. But just a few things that were covered there was their drive ecosystem now having a base of over 450 automakers, suppliers, and mapping companies that use their autonomous driving platform, including newly announced partnerships with Toyota, Volvo, and Isuzu. They also have their Volta GPU that is being used by artificial intelligence supercomputers to reduce learning cycles of artificial intelligence from days to just hours and boost deep learning performance by almost 1,000%, and is already being used by cloud partners like Microsoft, Amazon, IBM, Alibaba, etc. And they also launched their new GPU acceleration platform called Rapids, which is used for large-scale data analytics and machine learning, and that's already been adopted by HP, Dell, IBM, and Oracle. And if all of that wasn't enough, they also launched Clara, which is their platform for the medical market. And then looking at the all-important gaming market, they of course launched their new Turing-based cards, and while those are struggling for now, we can at least expect a bright future as the gaming market has been growing by billions of dollars every single year and is expected to be worth over $180 billion by 2021, according to Newzoo.com. But let me know what you guys think about NVIDIA. Their upcoming earnings will be very important to watch, especially their earnings call. You can bet that a lot of analysts are going to be asking them some tough questions, and NVIDIA is going to have some answers. I believe that's going to be on February 14th. I will definitely make an updated video for you guys, so make sure you subscribe for that. And again, let me know in the comment section how you feel about NVIDIA. Are you taking advantage of these lower prices? Are you maybe just holding if you already have the stock? Are you selling? Or are you just planning on never touching the stock? Do you not believe in them? I'd love to hear all your thoughts. And of course, if you enjoyed this video, make sure you hit the like button. It really helps this channel survive and really allows me to put out more videos for you guys. I really appreciate all the support. I hope you all have a nice day. Take care. Bye-bye.